This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. SBSW, how a precious metal miner stock is positioned to withstand an oil price shock. And why in particular this? We've got an issue right now with miners in general, gold, silver, what have you, any miner. But the point is massive reliance on diesel and energy costs in general, or energy inputs, I should say. So gold supply, silver, the rest can be lost due to diesel shortages. And this research, which client Jose put together, and I just grabbed this news that basically Australia, a country fueled by diesel, is running dry, and how that affects their production. A gold mining cuts production, they can't get fuel. And it was started in Australia and starting to risk in Africa. Anyway, the point is you can actually have an oil shock that can impact not just supply, but all the profitability, et cetera, et cetera. You don't have product to sell. It's not that it's just in demand. You just don't have the product to sell and it's too expensive, so margins contract. But this was the interesting review that Jose did and shared, which was basically this SBSW. Why? Because it has a palladium and platinum key metal, and then they have a gold operation, but their operations in particular, you can see it's very heavy palladium and platinum. So how does that get affected when they have an auto channel, auto production volume that hits when you have rising energy costs? And you also have how long are you going to repair? You got to replace these catalytic converters and such. It's definitely gold as a safe haven, and inflation hedge is a great play to hold on to as long as the shocks are not sustaining or rising. And in this case, we have sustaining and very well could rise. So in this particular case, it's a little 40% of global palladium is from Russia. They produce it. And this closure in the Strait of Hormuz is definitely putting risk on supply into the market on top of a demand shock because of higher prices. And that's going to all affect in time demand for internal combustion engines and this rotation into EV. So anyway, long story short, he did this great scenario analysis since SBSW is so heavily focused in palladium, platinum offset, that what would be the hit if we have Brent at $100 a barrel sustained, which is where we are. And then what happens if we move higher into 150, you would get a strongly negative demand for palladium. So an example he showed was palladium price crashed 18% on April 2025 tariff shock alone on trade uncertainty. So a genuine product collapse of 15% would be far more severe. So you've got ICE demand destruction accelerates the EV shift, and that's structurally negative for palladium long term. And you've got gold price as typically your inflation hedge, but for palladium and platinum, you've got a lot of other contributing factors. Also, the FX currency is part and parcel of this. This is not just an easy answer to give you my technical read. It needs to consolidate. Range of digestion could actually be bearish. Right now, we have got some good analysis that kind of also shows how rising energy prices can hit palladium and platinum demand on top of production costs. Anyway, I can share this very easily. He's got a great summary scoreboard on SBSW and its baseline versus oil level sustained versus your big negative hit, strongly negative if we get. Right now we're mildly negative. Let me answer that with his report. Palladium, SBSW, for example, palladium platinum, is mildly negative with a fall of 5 to 10% palladium demand at $100 oil. It is negative 15% fall if we go up into $130 transitional level, and then $150 oil is strongly negative. So it's positive gold, but it's negative the underlying. So I don't know if that helped at all, but the bear case is if we get higher oil, we absolutely have palladium price crash, collapse as auto production falls. the Stillwater burns cash, the company is forced to revisit its capital structure, and the gold upside is not enough to compensate because they produce both, right? Gold and palladium. The bull case, gold rockets, and obviously we've got cheap dollar, and we've got palladium prices despite weak demand as critical minerals come under some geopolitical stress, but gold is still your best inflation proxy. And then basically, he's not saying that SBSW, which produces both gold and palladium, it's not a directional bet on oil prices, but I think he showed how it can be impacted on the underlying demand for palladium. So it's not a better inflation hedge, is basically why I'm bringing up this report from client Jose. It is a more nuanced, and long story short, if we have a sustained oil shock above $100, it generates this tug of war between gold, which is an inflationary asset, and US palladium anyway, which would be bearish. Therefore, that's why I look at this SBSW chart a lot, because we've broken down from that January volatility event and we came back down to the 50-week. Can't really still see a clear path of getting back above in trend. So far, it has continued to get rejected. So long way of going about your question, but ultimately, I still think, technically speaking, this palladium chart is digesting, coming back in, and so is platinum, which has already reached all-time highs and is digesting. It is just kind of a cycle that ran too hot, too fast, and now it needs to digest, because what you want in a proper trend is this kind of action, right? When it gets above and then it goes up and to the right from 2002, 2003, 2004, 2005, 2006, 2007 was the end, and then it crashed. And we had a little bit of a bid post-financial crisis for like a year, and then it went into a protracted downtrend. And then it went sideways, and then it just spiked higher. So if you didn't catch this in 2025, and I know Phil did, client Phil did, because he was very focused on palladium and platinum, and historically he's got probably some good insights, better insights on use of these particular metals, which is a small market cap, much smaller market cap than silver, and especially much smaller market cap than gold. Anyway, he'd have some better insights since he's a pro at trading the physical and the palladium platinum markets.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.